Hey guys, how are you? Been a tough time for the crypto realm and crypto traders, but want to give you some perspective and also a bit of hope. I don't just do it just to be nice. It's got to exist. The justifications have got to be there. I'm the technical guy. I believe the seeds, or let me rather say, I assess that the seeds of tomorrow's future price behavior is actually sown in the patterns of today. That does give us a guidance and a probability, not a guarantee, but it means you can be on the right side of markets more often than you would be typically if you're just responding emotionally. So with that in mind, let's take a look at Bitcoin USD. Folks have got to remember that we ran a few big critical key levels of significance. The 5,000, we balked at it, then we pumped on it through it, then we went straight through the 7. We slipped back a little bit at 7.7, then we poked through incredibly strongly on the 8. We smashed through the 10 and had a little dip back, invariably respecting the key level of significance there at 10, dip back, and then we just went melt up, guys. Melt up, 10 to 19. I mean, you're talking about 100%. The first time we ran 10 was there. The proper time we left it good and proper for the run-up was actually on. Look at the dates in the dark square below me here. So let me just keep showing you. That was the candle by my assessment when we properly left 10 after just breaking through it and dipping back. That was the 1st of December. It wasn't that long ago. That candle there, that was the first time we broke it. That was the time we properly left it for this charge up, and we smashed up to the 19,782. I mean, on Coinergy, I got a premium Coinergy and TradingView. I interswap them. Sometimes TradingView, I have so many open that hangs a little bit. So you've gone in essentially December and what's left of January up to 19, and then you smash back down, and we're sitting at 8,230. And everyone's morbid and it's terrible. You've got to remember, we started the year in and around this. We traded as low as in the 700s and was around $1,000 for most of the time in the beginning of 17. And you're finishing January the following year at 8,200. Don't cry in your beer too much, folks. Volatile markets do what volatile markets do. There's always a bear season. Just because it's very, very built up and explosive to the upside and expansive doesn't mean you escape a bear cycle. All that happens is you go up a heck of a lot, overshoot tremendously, and you have an even more volatile journey. A lot of guys crying in their soup. It ain't over for cryptos. It isn't even begun. This is where we're at. And this is the pattern I wanted to show you that give you hope. So technical analysis dictates this is what's called a falling wedge. A falling wedge, yep. So it looks like it's falling and it's like a wedge, a fat end of a wedge. We got those two as 2 contact points. You don't always have the high point at the top. I've split it down the middle, and we've got this little marginally lower low here, which is grinding along the bottom ass part of the wedge. And you know, that's quite typical, and you get a little bit of a lower dip maybe, but actually the volatility and the meanness of the sell-offs is calming down. There was a micro fractal in there of what we call the inverted HVF. You'll learn all about HVF strategy. Just pop over to the website, the link's in the notes. But the HVF method warned us that there would be a further downside move there. It also gave us first setups in new trends in there and there on lower time frames, and in fact here, and this is of course an inverted as well. But you'll go find out about that if you're interested. The key point is this all formed on 10,000. That was your key level of significance. So the fractal was being respected. Just run marginally, just tested here at the 10,000 on this low, just coming up and supporting, and then grinding above it, trying to stay above the 10,000. Then it spilt down and then microfractaled again on it, just respecting the key round number. This is what happens. And you saw what I explained when you broke through and you got all choppy and volatile. It had to pump through it. Lots of orders would have been at 10,000. So when you get order clustering, you often get acceleration towards that point, and then smashes through, and then a lot of profit taking. So it's quite an emotional level because it means something to us as human beings. And this is technical analysis is a conglomeration of humans' energy. So following that, a little dip down, there you go, there you have it, and then marginally lower low happening here, just grinding along the bottom of the wedge. What comes out of a falling wedge in the medium long term. And that doesn't say we can't go a little bit lower and have a minor little spill through just before, but in the more medium to long term view, there's been a lot of selling across the tops here. There's been sort of retracement buying in a tactical retreat. Eventually you get that, and that will be quite impulsive, and it'll be strong. What you could then get after that is what we call the secondary high. So it doesn't go straight away out of this falling wedge. It's not going to go to breakout, melt up momentum again. You get a secondary high somewhere here, one of the key levels that was respected. You got 17 that was touched, so somewhere maybe around here, and we call that a relative high too. You get a drift down, and then you get a third more low volatility calming period, and that's when you pump and you make new highs. That would be my model for what comes next, but the falling wedge is underlyingly bullish, even though it doesn't feel like it while you're making it. So some hope for you, and a quick clip on falling wedges in cryptos. Keep your eye out for maybe a little nosy through, a final little death swirl just to the lower line. Doesn't have to do it, but can, and everyone gets totally morbid, and then the pump. Often actually, just for completeness on wedges as well, you get what's called a return move as well. So it doesn't necessarily pump in one go. You go first out impulsively. That gets all the bulls excited. They charge in and buy, and then you get this unexplained dip, and it just feels like the market hates you. No, it's just price behavior doing what it does, and then it moves. So that's called a return move to the wedge. So watch out for that. I hope that you find that useful, and I look forward to updating you all a little more on Bitcoin's future, slightly sunnier future. Enjoy yourselves. Details on themarketsniper.com on the HVF method. Find it on the link attached below. Enjoy.